Fed Jerome Powell did it again, ladies and gentlemen. He gave us a bombshell that the markets kind of sold off on. They're kind of starting to recover a little bit. We'll see what happens by the end of the day. But exactly what Fed Powell just said. Powell, quote, says inflation data really changed beginning in October. Quote, we won't hesitate to raise rates above neutral if needed. Quote, Powell says neutral rates not a stopping or looking around point. That is the bombshell right there. Powell says neutral rates not a stopping or looking around point. That's essentially saying that, hey, we could go higher than 2.5 to 3.5%. He's saying we're going to go as hard as we need to get inflation down no matter what happens to the economy. Basically saying the economy can handle it, but at this point we are on a crash course into a recession. And Fed Jerome Powell's basically saying like, hey, even if we get a small recession, we have to get inflation down. So the markets initially sold off because of this. Now we're hanging out at the bottom end ranges of today. We'll see what happens here in the last hour or so of trading, but this was big, and it would not surprise me to see markets digest this as negative or potentially just slightly neutral, but this is a very big deal. So I want to talk about exactly what has been going on today, potentially what this could do for the markets, so on and so forth. Hit that like button, subscribe to the channel, and source those comments, questions, or concerns down below in the comment section. And make sure to get your free stock with Webull, Moomoo, and Public down below in the description as well. Now, let's get into this video and what actually happened today. We had some good news, we had not so good news, but by and large today was not a bad day, with the S&P currently up 1.21%, NASDAQ up 1.65%, and the Russell 2000, the most beaten down index, is up 2.5%. The biggest bullish news that we got today was Shanghai to end COVID lockdown and return to normal life in June amid economic slowdown. So that is very good. China, obviously the second largest economy, like Powell just said, one of the main manufacturing hubs of the world. So when you have supply chains getting messed up because of China, then you're expecting to see some inflation. And basically what Powell has been saying, the longer this goes, the harder it is to get inflation down, which is what we already know, but the Fed is acknowledging that. And that's what was different in the last Fed report, is that the Fed actually named China and COVID lockdowns as a problem, and now we're starting to see some of those kind of starting to lift. So the sooner China goes out of this lockdown thing, whatever you want to call it, whatever they're doing over there, that's going to be very, very positive for the markets, and that's a big reason why the markets are actually positive today. Now, on the other hand, our retail numbers came in a little bit less than expectations, but still pretty good. And it says the key points. Sales rose 0.9% in April, just below the 1% estimate according to numbers that are not adjusted for inflation. April's gains were powered by a 4% gain in miscellaneous retail and 2.1% jump in online sales. A separate report showed the industrial production rose 1.1% in April, well above the 0.5% estimate. So by and large, the retail numbers could have been a lot worse. So that's going to be a positive thing. Retail sales could have came in negative, right? So the fact we were pretty close to estimates is a good thing. The markets, they don't really care about that 0.1%. Good retail sales kind of show that, hey, maybe the economy is not in a recession. Maybe it's not heading into recession here in the near term future. And maybe some of this pricing in has went a little bit too far, too fast. By pricing in, I mean the NASDAQ at the peak down 30%, still down well over 20%. Maybe too much was done too fast, and that's why you're seeing a bounce today. But these Fed comments are absolutely mind-blowing right now. And honestly, did not expect the Fed to say that. Like, neutral has been seen as the rate where the Fed might actually start to back off, and neutral is essentially, boil it down like this: when the Fed is not either accommodating nor restricting economic conditions. So it's a neutral rate. They're not helping, they're not hurting the economy. And that's where a lot of people are like, hey, the Fed might chill out at that point. Inflation should come down. But the Fed's saying that is not a stopping point. That's not a point they're going to look at and say, hey, we're done. We're going to stop raising rates. They're saying that they're going to go even more aggressive than that. If you're talking 50 basis point rate hikes, you could be substantially higher. 2023 could have 5 or 6% federal funds rates like we seen during 2008. That's going to cause a very large recession. He also did talk about a soft landing quite a bit. And he says, Powell says labor market still solid if jobless rates rises a few ticks, and the unemployment rate is like 3.6%. So he was essentially saying, hey, if the unemployment rate goes like 4%, we're not worried about that. There is 2 job openings for every 1 unemployed person. So that data does suggest that there's room to tighten the labor markets, right, to get things down to a more normal level, as well as to raise rates, basically saying the economy can stand on its own 2 feet. And then Powell says China lockdowns are preventing healing of supply chain. Powell says war in Ukraine looks longer lasting than first expected. Powell says wouldn't have such inflation without supply issues, and that's kind of what he highlighted on a lot. Saying that the supply issues, what we already know, but it's good to hear it from Powell, that essentially the supply issues we've seen, Powell cannot do anything about that, but that is making their job a lot harder to get inflation down, and that's why inflation might last a little bit longer. He did acknowledge the fact that they did not expect supply chain issues for this long, and that they're not going to dictate policy based off of what they think is going to happen. Essentially saying, hey, if China were to open up completely tomorrow and supply chains were to be fine, they're not going to stop raising rates right now just because that happened and look at more data. They're going to keep going and then look at the data as they go. So it's kind of forecasting much higher rates. He did go on to say that the economy has, or I should say financial conditions, the stock market has priced in a substantial amount of tightening, rightfully so, because they are going to be doing a lot of tightening. He's basically saying, we ain't here to help you. We got inflation. We got to get that under control. Whatever happens, happens. If the labor market, gets a little bit worse, if it gets a little tighter, that's what's going to have to happen. He's basically saying, be prepared for not so great financial conditions, aka the stock market may not bounce back in such an aggressive way as it has in the past. That's kind of what you could boil it down to. Probably not these V-shaped recoveries that you are used to seeing. That's the beautiful thing here, though, with these not a V-shaped recovery, a long-term downtrend, is that you can actually acquire large stakes in stocks over the course of months or potentially a year or two, and then that's where you make all the money once the economy actually comes out on the back side of this. And that's what you guys should be looking forward to, is not necessarily you want the stock market just to rip tomorrow, but you want to have a lot of time to acquire these very large positions. I said this in the last video, but if you make, let's say, $100,000 a year, and you can invest $30,000 a year, 30%, up it a little bit from what you might normally invest per year. That's $60,000. Say if this market is down for 2 years, invested in a lot of long duration growth, a lot of growth companies. I mean, that $60,000 could very easily turn into $1 million 5 years from now on the backside of this, right? Potentially more than that, just depending on what you invest in. And that's the best way to look at this. So I guess it depends which way you're looking at this, but this is not going to give us that relief rally, that major bounce that some people were hoping we would get out of Fed Jerome Powell today. Other Fed speakers pretty in line with what Fed Jerome Powell is saying right now as well. Nothing too crazy coming out of them. Obviously, Fed Jerome Powell is the main guy, and he is going to dictate the markets and what happens by and large. So those are the main headlines that actually did come out, and that's potentially what could move the markets here over the next couple of weeks, right? Powell did just say real chance in near term that globalization reverses. Powell says we'll never say more people need to be out of work. Powell says would love to see labor market that's more in balance. Powell says neutral rate probably well above 3.6% now, should move down. So, it's not a good situation overall. So I would just know that there's going to be a lot of volatility. There's going to be a lot of back and forth moves, and we're probably not going to see some, all-time highs anytime soon. We'll see what happens with earnings, if companies can still do well, or if the economy does go into recession. Those are going to be the key things. But for right now, I would be very, very cautious with a lot of these trades, because it wouldn't surprise me tomorrow the market's down 2 to 3% based off of what Powell said today. Now let's talk about AMC stock and the information and the data that you guys need to know. Everything is taking a little bit of an uptick here in the markets. We'll see how things hash out by the end of the day. If we do get one of those power hour sell-offs, not going to be such a good thing. But right now, AMC stock is up about 7.5%. Up almost $1, currently sitting at $12.58 per share. So a very strong move. And like I said in the last video, if you guys have not seen that, due to the executive order and how big this has been in the past for AMC stock, literally being the moment where AMC would start to run and go through the January rally as well as the June rally, it looks like it was based off of this executive order, and the executive order goes back into place here in about 2 weeks. So if that happens, what you tend to see before the executive order actually goes into place, you tend to see moves up in the price of AMC. Obviously back here going from $1.91 all the way up to about $4 or $5, and then it was implemented. The stock went from those prices to $20. Same thing back here, right? It went from, like $12 all the way up to like $25 the day it was implemented, and then we went from $25 to $72.62. So it wouldn't surprise me, and I'm not surprised we're seeing this bullish activity, but it would not surprise me to see more bullish activity over the next coming days and coming weeks leading into this executive order that will go back into effect around June 2nd or June 3rd. We are at a very important level, currently $13 per share. That's the key level you really want to be watching, because this is really the support that we've seen even even back in March. That was the level that we hit. We hit the bottom at $12.90, and then we did go through this monstrous rally. We did hit a new low, obviously, about 3-4 trading days ago at $9.70 per share, seeing a quick reversal. This was the day AMC was actually up 30% at one point. Still had a strong close of about 8%, but you did retrace a lot of those gains we seen earlier in the day. You could call it manipulation, you could call it whatever you want. I certainly like to, but at this current point, we need to break out above 13. It could happen tomorrow, could happen the day after that, but I think it's going to. And then I think ultimately we could see a move above 15 by the end of this week. My price prediction was in between 15 and really 17.23, in between this range, coming up and retesting the 50-day moving average, a level of resistance, as well as retaking the $15 level as a continued level of support like we've seen for a very long time in the past. 15 has really been the key level, and we just fought around 15 for a while before we actually did slump under that. So that's that. As far as the RSI, that's at 38.67. So even though we've seen a couple decent days, an 8% day, 5.5% day, now a 7.3% day, the RSI has hardly moved up at all, still showing that the relative strength index is still very, very oversold and not even close to that 50, which is the neutral level. So we could go through another big rally, another couple big rallies before we would even be getting close to that oversold level, or even close to neutral for that matter. That kind of shows how bad the sell-off has been as of recently. The MACD wants to go bullish, but not quite bullish yet. If it does go bullish, that could be a big sign for us, investors, traders in AMC, as well as the algorithms could start to give the stock a little bit more of a bid here. But I think by and large, what is actually happening is really due to the option activity. You could see there is a lot of options for the call side today, but as well as that, you've seen a lot of, calls go into the money. You've seen a lot of puts that run out of the money today, and all of that just leads to buying power on the open markets by the market makers. And you are looking at more specifically 2 orders totaling 284.95 thousand, positive order value of 100%. Lots of call activity coming through on the option chain, but we are seeing a lot of puts right now as well. And I think you're not really seeing shorts covering that's causing this 7.5% move. It's really down to the market makers. Now the short interest of free float is 21.78%. Current share short interest of free float is current shares that are sold short of 112.28 million. Cost bar max at 5.1%, utilization at 100%, and days to cover sitting at 3.5. 13. So all of this looking primed if we can get some level of a rally here. You have also seen about 17,000 calls go into the money, still sitting with about 239, almost 240,000 calls that are out of the money. All in all, you've seen about 1.7 million shares that had to be bought today by the market makers to hedge out the call side. On the put side, you've seen about 8,000 puts that did run out of the money today that were previously in the money. That's about 800,000 shares that had to be bought by the market makers alone. So that's well over 2.5 million shares market makers had to go out and buy today. Now, on the put side, on the call side, it's still very large, about 92,000 puts that are in the money still, and 240,000 calls that are out of the money. So if you do see a big move up, that's going to be a lot of potential buying power. We've talked about that a couple times, but I think it's important to know that even the puts that are in the money, when the stock goes up and they go out of the money, that is also a form of buying power. It's not just calls that, you know, people buy that go into the money that forces market makers to hedge out like a gamma squeeze. It's also due to the put side. And I tend to think the put side is a little bit more important when it comes to AMC. At least that's what the data has showed us in the past. So that is pretty much going to be all for this video. We don't really have anything else too crazy for the rest of this week. This was really the big day with Fed Jerome Powell and the other 5 Fed speakers that do speak. Retail sales, like I said, were good. You do have some real estate data that does come out tomorrow. Housing starts APR, building permits APR could move around real estate stocks, but they don't, you know, control the overall markets. And then on Thursday, you also do have existing home sales, just a lot of real estate data, nothing too crazy that's going to affect the S&P, the NASDAQ, or the Dow in a major way. So that is pretty much going to be all for this video. Thank you guys for tuning in. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Get those free stocks, Moomoo, Webull, and Public. Link down below in the description. And if you guys want to come trade with me live in real time, link down below in the pinned comment to do so for that one. So that is all. You guys enjoy the rest of your day, and I will see you in the next one.